Can you see it now?
Almost. Yep.
Oh,
Coming, yeah.
it's
Yep.
coming from Canada and it's snowing here today, so it's taking a while. All right, so yeah, before I begin, let me take the roll call. So Scott, you're there. Esky's not. Sandra, you're there.
Yep.
You're there. Pam, you're there, and
Here.
myself. And I welcome all the owners who are in attendance as well. Thank you. Thank you for participating.
Katina's here too.
Yep, Katina, I got you down, Katina.
Okay.
Uh, so let me, what we usually do at these meetings is go over some financial matters. And one of the things we review are the operating performance, both from an expense point of view, an operating budget, and from a project point of view through the reserves. So let me just go to page one. So there's three sheets here. The first one is the operating income and expenses. And across the top, what we see we show 2024 full year actual, then the year-to-date performance compared to the year-to-date budget with both the dollar and percent variance, our full year budget and what's remaining in the budget, and some comments. And we split that into two groups, revenues and expenses. And this is really a simplified version of what First Services issues every month through their financial report. So if anyone is interested in getting further details, you can dig down certainly in the First Services financial report. But this is really a snapshot of where we are. So I'll go over the broad lines. So October year-to-date actual, our revenues are 5,924, 5.9 million, compared to a budget of 5.7. The variance is 214,000, and all of that variance is made up of interest revenue. Our cash reserves have been more than what we had projected, and we're earning revenue on those. And in fact, this week we just renewed a treasury bill, a T-bill for over $1 million, and that was at a very good rate. I don't have the rate off the top of my head. Heskey had it, but it was good timing because, talk is that there's going to be an interest rate cut. So the more we can lock in at the current rates, the better. So on the expense side, we have six categories of expenses, ranging from salaries, insurance, contracts, utilities, repairs and maintenance, and administrative. So you see that the year-to-date actual is 3,960,000 compared to a budget of 4 million. So we have a favorable variance of 49,000. So we've almost 50,000. We've underspent the budget by 50,000. When you look into where the gaps are, well, the biggest one is the insurance savings. We're saving 171,000 this year because of lower premiums compared to what we had projected in the budget, the 25 budget. However, all of that except for 50,000 is offset by higher administrative costs, and those range you see in the comment column. Legal fees are 78,000 over budget. So to put that in perspective, last
Mike, sorry, it's David from 804. If you don't mind highlighting every time the number you're talking about, because for those of us who are looking through a phone or something, it's a little bit harder to see. It'll just make it a little easier. I
does
appreciate
that
it. Thank
work?
you.
Does that help?
Yes.
Okay, sorry.
Yes, that's perfect. Thank you.
So do you want me to start over or is it fine so far? Or
No, that's fine.
let me
That's
just
fine.
take a second. Do you want me to, I'll take a pause and address any comments or questions that somebody may have. Either if
Thank you.
you want me to review something or what have you, but
Hey, Mike, just because you mentioned it, the yield to maturity on the bond is 3.596%.
okay,
And
thanks.
the issue date was October 30th, 2025, and it's matures on October 29th, 2026.
Yeah, and I think it was just over 1 million, was it? Or
Uh, yeah, like 1,073,000 and change.
okay, good. Thanks, Scott. Thanks for clarifying. Okay, so the administrative shows an unfavorable variance of 179,000. Our spending, let me get back here. Okay, now my screen's frozen.
Sorry,
Okay,
it's my fault.
sorry, David, my screen's frozen. I can't, so I'll just,
Just keep talking. Sorry, my bad.
so the administrative expenses total 383,450, the second column.
Oh, no.
I think it's a disease. It overtook everything.
Uh, uh,
So what happened?
Oh, that's good. You're here.
Yeah, I'm here.
Hey, Mike, if you're speaking through your iPhone, you're on mute on your iPhone.
Oh, he's back.
Still muted.
Okay, am I back on the, can you hear me?
Yes.
Okay. So, so legal fees, just to put that in perspective, in 2024, we spent 64,000. Our 2025 budget was 55,000. We're currently at 124,000 in spending. Our 26 budget is 90,000. So hopefully we won't continue at the pace of this year, although this year there have been some exceptional cases that had to be litigated. So, but the point being that legal fees are really climbing, and that's not the board's fault, it's not the owner's fault, it's just stuff that happens, but we have to be more, how can I say, from a management board perspective,
Diligent.
we have to be careful, and from an owner's perspective, let's not litigate where there's no reason to. So that's my message. Otherwise, these
Yeah.
costs are going to keep skyrocketing.
Hey, Mike,
Yeah.
I was reading the description of the explanation as far as why legal fees are going up, and a lot of it is contract review. I'm wondering, instead of having a I don't know what the lawyer situation is as far as staffing, but instead of having a senior lawyer review some of the contracts that are standard, mostly standard language, maybe we can work with a law firm to have a lower level position. So that way, we use the senior lawyers for the things that are critical, but then get billed at a lower rate if we can for the other things that are customary.
Yeah. Well, we have to do something, Katina, and all suggestions
Yeah.
are valid. So we certainly, from a finance and insurance committee point of view, we'll try to do more in this area somehow. But yeah, maybe we'll have a special session, just go over that. I know
Yeah, detail.
some of the owners are lawyers as well, and people have ideas, so maybe we should do a bit of brainstorming here on
Yeah.
how we can mitigate some of these costs going forward.
Well, Mike, like 50,000 of it was write out settlement on that derivative lawsuit. So we had to
Right.
pay legal fees for that. And the plaintiff appealed, so that's another $35,000. I don't know if we paid it all or whether we just paid a retainer on that. And yeah, I mean, you can see our meeting on December 11th. It's all these new resolutions that we're trying to pass. All this takes time, wording of the different measures that we want to bring forth to a vote. That takes legal work. In addition to what Katina said, we've had a lot of contract reviews, issues with our elevator companies. So that there's some construction related legal fees there. It's not just legal fees, but then also just last week, what triggered this whole research on the payroll overhead was, we have owners that just want to harass us. They request extraneous mountains of documents just to annoy Scott, to take away from his more important duties. And left and right, we're getting hit with frivolous, claims and lawsuits. So it's coming from all sides. It's not just the regular routine.
No, and I think that's the point I was trying to make. It's coming from all sides, and both from a management and board point of view, we have to be more diligent in
Yes.
finding ways for contract reviews, like Katina says. And from an owner's perspective, let's be careful before we take litigation or take
Good. How are
matters
you?
or make a lot of requests. Of course, it's legitimately
I'm
we should be able
working
to
a
answer a
Zoom
lot,
meeting.
but
It's
sometimes
a
we have to
lot
go to
right
legal
now.
counsel, and that costs money.
All right, you want to call me later?
Sorry, is there a comment or a question?
It's not, okay, right after this is over, it
Joyce,
shouldn't be
we can
much
hear you.
longer.
We can all hear you, so maybe you can mute yourself.
Okay,
All righty, talk to you.
okay, bye.
Oh, okay.
I have a comment, Mike. It was my understanding when I attended a committee where we were talking about contracts, where Donna Becker had commented to us that she could write a contract cheaper than she could review the AIA contract. And I personally see some pros in the AIA contract. And like the other people have said, I've seen where attorney has standard language on the AIA contract, like an addendum or whatever, or special conditions that makes it go quickly. But respectfully, if the attorney said, hey, I can write the contract for cheaper than the AIA, then using the AIA that the construction manager wants, I think we should have probably explored that more deeply. So I'll just offer that's the limited information I have. Obviously, I don't sit in on all the legal committees. I'm not going to go comment about Heskey's comment about document inspections, harassment and stuff. I do have thoughts on that. But what I will say, as far as the legal is concerned, 5 years ago, I said to Playa del Sol, hey, why don't you choose 3 mediators? And you choose 3 mediators. Let's split the cost. Let's do mediation. And the response I got back from Playa del Sol was, no, we're not going to consider a mediation option. And then the attorney wrote and said that she would only talk to me if I hired an attorney. And in another occasion, she wrote that she continued to strongly suggest that I hire an attorney. And so I think part of it, I don't think you can say that it's not the association's point, because if our attorney's stance is going to be no mediation, no alternative dispute resolution, only talk if we have attorneys involved, and even go as far as saying that if what the disputed matter by the state's arbitration panel came back against Playa del Sol, instead of saying, hey, we'll think about it, she wrote that she would definitively appeal it, and at that point recommended I hire an attorney.
Brooke, hold on a second. It's David from 804. This is super important what you're saying, and I would love to hear it. But we have a budget meeting coming up the end of this week. I would love to hear more about the budget itself, and maybe at the end we can continue this if you don't mind.
Yeah, listen, we can talk about this at length, right? I think the point is we're all motivated to try to address this in a
Yeah.
better way. Now, what's happened in the past has happened. Let's try to think going forward and how we can mitigate some of this trend that is, increasing for all, for right reasons, wrong reasons, or what have you. But we have to do it in a better way, I think, is the conclusion. So the administrative and other I've highlighted there. So legal is 78,000 of that. Professional fees is 52. And what we've done from a professional fee point is some of the major projects we're working on, and there's fees associated with those. And we've expensed them because from an accounting point of view, it's better to expense than to capitalize. So there we took a bit of a hit there, but we're saving on the reserves. Taxes, 36,000. That is purely for the interest revenue we're generating.
Yes.
So there's an upside on the 200,000 we talked about in terms of additional revenue from interest. 36,000 of that is taxes, and supplies is 11,000. So the good news is and it's a kind of a reflection on the 26 budget as well. We're making savings in insurance, but those are being used up by by other areas. All that to say that we're adding 56,000. If you look at 56,000 to our members' equity so far this year with 2 months to go. Before I go to the balance sheet, any comments or questions?
When I annualize the budget based on the actuals, it looks like we might be 78,000 favorable.
Sorry, repeat that.
When I annualize the actuals
Yes,
based on the 10 months,
yes.
it looks like it's probably about 78,000 favorable to the
Oh,
budget
okay, yeah. So if the trend continues, we'll be
based on the run rate.
yeah.
With the run rate.
Good point. Based on that, we'll be close to 80,000 in increase in
Right.
members' equity by year end.
Correct.
Okay. So the second page is the balance sheet. And again, there's two columns. What we did, well, we have balance sheet is at a point in time. So what we ended last year on December 31st, we have, and so far what our actuals are at the end of October. We have three cash accounts, one for operations where we have 1.5 million. That gives us a liquidity of 3.2 months. Our target is 3 months. Of course, at the beginning of the quarter, we have more liquidity because the quarterly maintenance fees are paid. The special assessment, so we have a special an account or a bank account for special assessments. We have almost 3.4 million remaining there, and that's where most of the roof money is going to come in. That is going to be applied against. And then we have the SERS and non-SERS reserves with a cash balance of 6.8 million, almost 6.9. Accounts receivable, we're at 145,000, which is high. And of that, these are really for resident delinquent accounts. Of that, 25,000 is over 90 days. So Scott, can you just maybe touch on that and share with us what we're doing to try to recover that money?
Yeah,
Give us some background.
so real time numbers, we're at 60,000 delinquent, with 19 of that being over 60 days.
Okay.
What we do office wise, once we go past the due date, we start sending the emails out to the residents, just as a courtesy, you're now whatever, 3 weeks late on your quarterly maintenance, please make a payment in the office or on ClickPay. And then First Service also sends out reminder notices after a certain period, and then it's called demand letters for payment after a certain time period. And those are required by Florida Statute 17 in the event the association wants to take a unit owner to collections or even file a lien on a unit.
Okay, so there's diligence, there's review of this, and then if action has to be taken, I'm sure you'll initiate that, right?
Yep.
In terms of collections and liens. Something we have to keep an eye on, and we will. The next item is prepaid insurance. So our insurance runs from June 1st to May 31st. So you're always going to have a prepaid amount. So that's why we have 706,000. That's really the prepaid amount from November to the end of May 2026. So our total assets are almost 12.7 million. If we look at the liabilities, our insurance payable is 600. Then deferred revenues, we have 1,000,001. And really these, since we pay quarterly fees, these represent the fees for November and December, which have been accounted for. And then we have miscellaneous accounts payable, all other. And then we have our three reserve accounts, special assessments, and we'll get into the details of that on the next page. At 3.3 million, SERS reserve at 5.2, and non-SERVs at 1.6 for a total of 12,131. And the difference between that figure and the total assets is the members' equity, 535,000 that's sitting in our books, cumulative. Any questions or comments before I go to reserves?
Can I ask one question to
Sure.
Scott? Deferred revenue, do we book the revenue when you send the bills out or when we start collecting it?
I'm sorry, can you repeat that?
For the deferred revenue account, do you book the revenue when you send the 3-month bill out? When is the revenue booked?
It's booked one every month. So
But so question is, no, the deferred revenue, because if you look at last year, there's an $800,000 difference. So is it timing?
yeah, it's time. Well, the deferred revenue. So we collected 3 months, right? And
Right,
1 month has been recognized in revenue, and 2 months have not.
correct. But if you look at 20, oh, that's December.
Yeah,
Never
that's
mind.
December.
Never mind.
Yeah.
I thought it was year to date.
No. It's not.
Thank
It's
you.
not an
Sorry.
October to October comparison. It's a December year
Sorry.
end.
Yeah, sorry.
Yeah.
Yep.
Yeah.
Yep.
Why do you do it 1 month at a time and not 3 months at a time? Since we pay 3 months at a time.
Well, because so
You
in
do
accounting,
not,
you're supposed to match revenues with expenses.
Right.
So
with
you can't
revenue.
overstate your revenues if you haven't really incurred those expenses because the
Correct.
expenses for those happen in November and December. So it's just a matching principle.
Well, also, if somebody leaves in October, you probably have to refund the 2 months back.
Gotcha. Thank you.
No, that's work to
think-
work closing statements. I would bet. I mean, that would be work to work closing statement, I guess, with the new owner.
Right.
Right.
Yeah, but it's still, we would still have, yes, it could go liability to the next
Yeah,
person.
the idea is it would still be a liability, right? In the sense that
Correct.
if the building burns down and you have to repay these, then you can't recognize that into revenue before the time has elapsed.
Right.
Okay, good accounting discussion. Page 3. Okay, so here we have the 3 reserve funds: special assessment, the SERS reserve fund, and non-SERS. So what we're showing across the top is the balance at the end of last year, December 31st. How much we've spent against these projects from January to the end of October this year, and the cumulative amount, which includes the balance last year plus the current year spending, and where we're at. So if you look at special assessment, we're sitting at 3.3 million. We were at 4.8 million at the end of last year. Sorry, total expense here, 5.2 million. We spent 1.5 this year, 1,449. So cumulatively, we've spent 6.7 million. Okay. And that is made up of the concrete project at 4.4, the elevator modernization at 1.8. The roof is negligible at this point, and 478 in PM engineering and administration fees.
Mike, can I ask you a question? Are you sharing the screen? Because I don't see anything on my screen at all.
Oh, is that the same for everybody?
Yeah.
Yes.
Yes.
Yeah, we don't see any shared. We're just going by what your number you're saying. We believe you.
Okay, well, I was sharing it. Hold on, let me start sharing it again.
Just don't freeze on us again.
Yeah, I'll try not to. Okay, share, where are we?
Mike, and if you could also talk about how it is you're projecting out the sharp construction management expenses for next year. I'd like to hear that since you identified it as an area we were over with legal, that legal was over, and that the professional services for construction management related type things went over. Thank you.
Okay. Can you guys see this?
Yes.
Yeah.
Yes, thank you.
Sorry about that. Yeah, I guess when it froze, the sharing stopped. Okay, so just to repeat so for special assessment at the end of last year, we were at 5.3 million. This year we've added almost 1.5 million to that, so we're at 6.7 cumulative for these projects. And those projects are concrete restoration, 4.4 million against the project budget of 4.9 and a contract at 4.6. And I believe all the costs are in for that, so we're to the good by 150,000 against the contract. Elevator modernization, 1.8 million against a contract of 2.7. Not sure where we stand with that and what's left and what's being held and so on and so forth. I'll ask Scott and Heskey to comment on that. Roof is insignificant at this point, $11,000. And the other item was PM engineering administration, and we all know we've had cost overruns on that. The budget was 381, we're at 470. We ended up at 478. So yeah, so maybe Scott or Heskey, if you can just say a few words on the elevator modernization and what's happening there with the payments from a payment perspective.
We did make a payment this past month. It was a payment that was supposed to be made in May that we were holding off on. Our consultant told us to release the payment, so we did. So there's still about 600,000 owed to TKE.
Well,
Which I assume
adjusted
is being
for,
held until they get things in order, or?
well, we're also charging back, on the liquidated damages of $500 a day. So they're at least a year behind schedule, if not longer. So that's another 120,000 right there that we're gonna get back.
Okay. All right. On the SERS, we ended last year with 3.7 million.
Wait, so Chesky, how do you look at it the money we're going to get back in terms of the budget point of view?
Well, it's gonna remain
Project.
it's gonna remain in the special assessment accounts, and then we're gonna have to vote what to do with that money. But if since the cooling tower is a non-Sears expense, and it got forced on us to incur that expense like 3 years ahead of time.
Right.
We're gonna be running on like fumes in the non-Sears account. So, at that point we can decide to fund. We're also our bids for roofing have come in under what we have budgeted. So we're gonna have about $400,000 or $500,000 left in our special assessment account that we can reallocate to any reserve account that the members vote for. And most likely, most of it will go to funding the Sears, the non-Sears, so that we can upgrade the hallways after the sprinkler and fire alarm project, and the HVAC riser replacement, and so they're basically going to be tearing up the hallways. So
what do you anticipate that money coming back from the elevator project? How much do you think it's going to end up being?
Probably 100,000 less than what we have budgeted. Plus, we're saving another 300,000-400,000 on the roofing. So, and then we had about 300,000-400,000 left over from the concrete restoration. So we're gonna have some monies left over there. So that's why with Mike and Sandra, we opted to going with the minimum reserve contributions for 2026, knowing that we were going to have some leftover money in our special assessment accounts to actually replenish those accounts.
So maybe you can actually go over why was the 1.4 increase necessary, given the fact that we have all this money back supposed to come back eventually that we didn't anticipate. I want to hear like the thinking behind it, especially after what you just said, that there's some money supposed to come back.
Well, as far as the Sears contributions, that's compulsory. That's no, we don't have any. The only choice we can make is to go between the minimum contribution and the recommended contribution. So we went with the minimum contribution. And with the non-Sears, given that we're about to embark on that cooling tower project, and the monies are going to be needed pretty soon.
We didn't know.
So you know, we're contributing 400 something thousand to non-Sears. It's not a huge amount. But
Heskey, to avoid a document inspection request, can you clarify something? If I don't have access to the pay apps unless I do a document inspection request because they're not posted. So are you saying that basically when we have a monthly pay app, the contractor says this is what I've done this month, here's the value, then are we deducting the liquidated damages of the 30 or 31 days from that pay app, or are we not doing it?
No, we're not deducting it because that comes in at the end. So we just, like Scott said, we just
as I said, I just wanted to know that because again, I can't see the pay apps. You see the pay apps, I don't.
That's going to have to be settled at the end. And
okay, thank you.
Performance, the bonding company's been involved, so that's a final settlement. That's when before we make any kind of final payment to them, there's going to be pluses, additions, and subtractions to the amounts owed.
So,
Thank you.
Brad, all things being equal, we've spent so far $1.8 million here. I've highlighted that. The contract is 2.7. What I understand what Heskey's saying is at the end, there are going to be some damages that are going to be offset against that. So we won't pay the difference between 2.7 and 1.8. We'll pay the difference between whatever we settle at, if it's 100,000 or 200,000, whatever it is, and what we paid so far. CERS reserve fund, I was there, so I got to speed up because we're already running for time here. 3.7 million is what we ended at last year. This year we have 1.489 million that we've contributed. Of that, 1.366 million is through the maintenance fees. 159,000 is through the interest income, minus what we spent so far as expenses, 36,000 leaves us with 1489. So the cumulative total at the end of October is 5.2 million. On the non-CERS, and the last year at 1.4, added to that 223 this year, which is made up of 333,000 from maintenance fees, interest income of 48,000, and we've spent 158 minus or less 158, so it gives us 223, which brings us to 1.6 million at the end of October. With that, it wraps up the treasurer's report. Any comments or questions before I go on?
God, is this a time that I can ask a question?
Pardon? Brad, yeah, back to your question. I'm going to take note of it because I think, so what was it again?
Yeah. Fred Fight from 1010. Thank you for
sorry, I just want to ask, Brad, did you said you wanted to address the question related to project management? Can you just summarize that for me? And I'll take note of it and we'll discuss it at the next meeting.
Well, it's Brooke and
sorry, Brooke. Sorry.
Well, it really is germane to the budget meeting coming up next week as to how you projected out the construction management cost was sharp for 2025, because I would think that would be in the budget. But thank you, Mike. I appreciate it.
Yeah, so Brooke, yeah, construction management costs for 2026, right?
Right.
And I'll take note of it and we'll cover it at the budget meeting on the 9th. Sorry, there was another question.
Yeah, Fred Fight 1010. First of all, thanks for all the hard work. Thankless labor, I would say. I want to make sure I frame my question so that everybody understands it. I have done like home renovation projects, and when I get the estimate and then the bill, it says parts, labor, license fee, tax. I've gotten NIH grants and it enumerates everything, and then it has a line for basically a service charge from the institution to the NIH, which you guys are all paying. It's a little too high, just as an aside. I've built a house and I was told, here's what the labor charge is, here's what the materials are, and this is what our profit margin is. Everything is marked up X%. So I have, as you know, I'm not sure if we're getting the best bargain in the world, if we're getting the exact price we should be getting, but I think for 265,000 roughly, and by the way, I think we're getting great service. I've said this to Scott like innumerable times. It's, and not just because the last person was so awful. You would independently, in my opinion, be very good. And whatever they're paying you, I would ask for a raise. That's an aside. But when there's a budget item of labeled surcharge, $262,000 or whatever it is, all I'm asking, just like I asked the builder, just like I asked the contractor, just like I asked NYU when I found out how much we were getting a great deal from the from the NIH. Surcharge generally means a surcharge. It's not for any particular services. Maybe it's the profit margin for services. Maybe that's typical.
So Fred, if I can comment,
let me just finish the
we're
question.
gonna run out of time here.
Excuse me. I'm going to finish the question. It's going to be very
please
brief
do.
at this point. All I've asked for at the meeting is just a line item thing, and it doesn't have to be. I'm not like somebody else who wants to see all the bills and the invoices. $265,000 we spend, and it could be from maybe First Services should provide it. We budget $25,000 for employee training. We budget $55,000 for dealing with regulatory. We budget $127,000 for X. That's all. That's all.
We agree with you. And that's going to be discussed at the meeting on the 9th. That comment was made loud and clear at the last budget meeting or at the last board meeting when the budget was presented, or at the last budget meeting. We will have that. We're working on those details. We have them and they will be discussed and presented. The owners have the right to know.
Perfect. And thanks again for your hard work.
May I chime in on that? It's Todd Brown. May I chime in?
Yep.
Yes, go ahead.
Okay. I don't hear a yes from anybody on the committee, but that's okay.
Yes.
Yes, I said yes. I hope, Todd, sorry about that. I thought you heard.
You're
more than welcome.
I understand your question, and I really want to because I think it's important. Are you referring to an email that was sent around by?
No, I'm referring to the budget. There's a line. It just says surcharge 22% of payroll.
I see.
Which could be like the best bargain in the history of the world.
I'm obviously not an expert on this, but I'm gonna, and as Mike and Heskey and Scott said, they're gonna answer the question.
Yeah, it's not hard to provide.
But I'm gonna guess, having run a business, that I'm just guessing, and please tell me to shut up if I'm way off base, because I've had to issue payroll to my staff for years. Typically things like FICA, Social Security, workers' compensation, unemployment taxes, those flat rate attached to whatever the annual or salary is.
Correct.
I'm just guessing that's what that is.
No, it's not.
Okay.
That's a separate budget.
Okay.
No, it is.
We're going to see. We're going to see, because if you look at the budget as you keep sending it to us, there's all these lines for expenses, which include FICA, which include this, which include that. And then there's a separate 200.
No,
Okay.
there
Well,
isn't. There isn't.
We have to debate it here.
Yeah, well, we can confirm that for sure. There isn't.
Again, complimenting everybody for their hard work. If all of that is included, then I don't want to see at the meeting next week separate lines for insurance, for FICA, for withholding, for this, and then see 22%. I happen to think 22% is a general management fee, and I think it may be quite fair. I just don't know that.
We hear you loud and clear, and we'll have that information available.
And Mike, just suggest that you guys have a sheet that people can pick up, okay? Because the fact that we stopped a budget vote on one item, okay, to me should have never happened. Okay, so I suggest, being that emails have gone out on this about owners, a budget vote did not pass. So that 22% and that $252,900 surcharge, give a breakdown, please, and show that whatever it is, 5% on payroll tax, whatever it is, whatever the breakdown is, please have handout sheets on the desk at the budget meeting, okay, so that we don't go through this again.
And for the record, respectfully, as somebody who spoke out and said, I don't think there should be a vote tonight, that was in response to another tenant who I believe is a renter, saying that he thought that the rate was like a mob. He used the word user.
Use the word user.
He used the word user. Again, you don't have to interrupt me. I'm a very clear. Yeah, I was just about to say that before you interrupted me. He used the word usury and said that he was going to bring a suit if this thing passed. And I just thought that it would not be wise, that you would be putting yourselves in a bad position, that this could all be worked out. And I, more than anybody, am on your side, just so you know.
Yeah, can I say something?
Sure.
Sorry.
Yeah, please go ahead, Eskeen.
All right, Fred, yeah, you're right. There's a $12,000 payroll tax item, but I think that's just for payroll taxes related to fringe benefits. It's over and above the payroll taxes that we pay.
Yeah, I know.
For the $1.2 million in salary.
Next to Rodney's salary, there was a thing of 40.
Do you mind if I? So the $12,000 tax that's budgeted for is a sales tax on security. We have operations and we have security. The person that roves the building every shift, we legally have to call them security. So when we do payroll, we code one person on every shift as security. So as our payroll expenses go out, a portion of that operations team is labeled as security, and there's a sales tax involved with that. That's what that $12,000 is budgeted for, is the security sales tax. All the other employee taxes, all the FICA, Medicare, SUI, FUTA, that's built into that 22%, along with a big range of other items that as Mike and Heskey said, we can discuss.
And Sandra and Mike have been working on trying to get an exact number, but generally, like I'm in business, that number, the actual cost could range anywhere from 14 to 16% in actual costs. And out of that 22%, there's some, earmarked for employee training, hiring and firing, and performance reviews. So those are, certain other costs that are associated with employment. And then last but not least, there is a profit margin there. Yes. There is, we don't know whether it's 3%, 4%, but there is something. But they're in business to make money like every other business in the country.
Well, there should be a profit margin, and if it's less than 10%, I would recommend that First Services get a raise.
Okay, well, they're doing great work, but I won't go that far. But
nobody works for free.
Nobody works for free. But look, you're getting heads up here on Tuesday. But like Hesse says, the taxes costs are about 12 to 14%.
Yeah.
There's overhead from a HR point of view in terms of recruiting, hiring, training, developing, and what have you, and profit. And the difference between the 14 and the 22 is that.
I don't know anything
simple as that.
For less than a 10% profit margin.
Well, the difference between 22 and 14 is 8, so that includes overhead as well.
Can I just say, and I think this horse has already been beaten. Again, it's Todd Brown. I agree with Fred. You expose yourself to rumors and misinformation when you don't provide clear information. So at the next meeting, I agree with Fred. I think it would behoove yourselves to articulate and put this to bed so that owners aren't spreading bad rumors that First Services is ripping us off. because I think that's what's happening. So it would help you guys a lot. So I agree with Dr. Fred there.
Well, I suspect it's the opposite, honestly. I suspect we're getting a good deal. That's,
I agree with you.
and I
They need to
and I
articulate.
don't,
They need to articulate it, and they need to clear the air, okay? Because 20 people tell 20 people, tell 20 people,
Yeah,
tell 20
absolutely.
people. And it makes a problem, okay? And people start having a bad attitude. And the other thing is that when you guys work on a budget, it's projected, okay? And if there are any changes, you can change the budget throughout the year, okay? It's not in stone. Okay, it's not because that's what you have there that's what we're actually going to spend. Okay, it's a projection. Okay, and people don't understand that, and again,
It's
people
Kathy, it's not a blueprint to spend money. I mean, that's like you say, it's an estimate of what we think. For each and every project, there's quotes that go out, bids that are solicited.
Yeah,
And that's what the mechanism is for spending money. It's not the budget.
exactly.
Well, most importantly, it determines what our, monthly HOA fees are going to be.
Exactly.
That's what we're trying to determine, that, we want to make sure that we have enough money to cover our expenses.
And it never serves a purpose when you have the reserve study and it gives you a recommended amount. Okay, I could tell you I'm in and out of hundreds of buildings up and down and all over the place. And the people that don't keep it steady, okay, and putting money into their reserves, they are struggling. Okay, and people are getting hit with assessments left and right. So the fact that we're reserving, even though we have money, we're constantly doing projects, and you constantly have to put money into that account, the seers and non-seers. If we stop that, it's a problem.
Yeah, it's short-term pain in terms of a few extra dollars in the maintenance fees, but the long-term benefits in terms of beautifying the building, ensuring compliance of maintenance and operations and structure of the building. It's and trying to avoid special assessments is all very, very important stuff we're doing, and we should be proud of it. Not just any committee, the owner should be proud of the building they have.
Exactly.
So this is Barbara, and I just want to make a point here. I think we're forgetting about the process we go through when we did the shift. So we didn't just wake up one day and say we're going to, increase our percentages 22% just because we think that we want to do this as a good idea. We went and interviewed the top companies. We looked at what their charges were going to be. We evaluated those charges. We did our due diligence. We did site visits. We talked to different building managers. There's a few of us, as Kathy explained, that are very experienced in understanding, what different buildings do and how they're managed. I really, when people get down to this 22%, they're forgetting the why we're here. And the why is that we needed to move our building into the future. We needed professional management. In order to do that, we needed to be good caretakers. That's how it all started. This 22% has been there, and we are benefiting from that professional management right now. So if people don't understand that, you have to pay something to get something, then, I don't know how to help them, but we just need to understand that we went through this due diligence 2 years ago and explained these fees. And so I agree with Scott and Dr. Feit in the fact that, maybe we do have to line item them a little bit better so that it's a little bit more visible, but it's not going to go away.
No, but that's a good point. I mean, the thing is, we have to keep reminding because there's new people forget as well. So it's a constant repetition, and we owe it to everyone to itemize those expenses and that detail, and we will.
Right.
and
I think it's our duty to do that, but it's unfortunate, that happened before because, it's very clear and, and I really feel bad that at that meeting that, there was purposeful, people, doing, attacking pretty much. And, that's not really the place to do that. I mean, we're all volunteers here. We're all doing the best that we can. We have actually a very smart committee here. This finance committee is very bright. Sandra, Susan Roy, you've been on this committee for a long time. You and Heskey. So, you know, it's a thankless job. And this budget, I would not want to work on this, you know, if it was the only job available. So from the bottom
No,
of
we're having fun, Barbara.
Yeah, Barbara, I think if this is what you took out of the meeting where the budget was taken down, then maybe you didn't see the full picture, and that's just from my point of view. I think that people have no problem with paying more, but I mean, obviously everybody has a problem paying more, but people don't mind chipping in more as long as they understand what it's for. And I think that the main point here, and this is what Kathy was touching upon, just information, just data, just the same way you would do with your husband, with your siblings, with anybody. It's just data, information. You want to pump it as much as you can, especially when you're using other people's money, and that's acceptable completely. So nobody's saying anything about this team. This team is phenomenal. The fact that they're doing it, good luck for them. I mean, it's phenomenal. I'm not sure I would want to do that all the time. And I think that you guys are doing a phenomenal job. It's just people need more information, and that's it.
If I can just say too, you guys, before First Service was here, you guys, the association was already paying those employer taxes, you know, contributing to employees' 401ks. You were paying 10 grand a month for the ADP system to process payroll.
The processing fees, yeah.
Multiple other items, and that's instead of Playa del Sol having to pay all those all separately, you know, every month like you did before you were managed. That's again built into that 22%. So it's not, a lot of that isn't a new expense. It's just showing differently on the line item on the budget.
They're not our employees anymore. They're your employees.
Correct. So that liability shifts over.
Right. So
for
that
service now.
liability that shifted also from us because we were managing it and managing it terribly.
Okay, can I'd like my turn. I think Kathy said too. Going to Kathy's point on the reserve study and the budget though, is like right now I'm looking at the reserve study and it says card fob reader system, remaining life 5 years. But yet when I attend the board meeting, I hear folks talking about, you know, replacing the fob system next year. And see, to me, that's a bit of a problem. If the reserve study is saying, hey, we can wait for 5 years, we're over budget. There were people who were promised that fees were going to go down after this concrete work got done. And I think that that's a valid issue that I think homeowners who are concerned about cost, you know, have a right to bring up. So that's just what I'm going to say is that that I think it's very confusing when folks just ignore the reserve study. And again, that's why people like me do document inspections to try to find out what's going on and where our money's going. Because I had a very bad experience just this January with the whole door buck thing for 6 months. And we just need to know the information.
I second that.
I think, you know, at the end of the day, we all have to do a better job of managing these things. And if we have a reserve study and some of the items are not end of life, then we should seriously have a justification that that documents the benefits, the reasons, and why one would want to do it. And we have to do a better job of that for sure.
I think you're doing a great job. And I think you're doing it for no compensation. And in medicine and science, we always start out with a hypothesis. And my hypothesis is whatever you call this thing, a surcharge, whatever, my hypothesis would be that we're getting a fair price or a bargain. Be my research.
Katina, we agree with you. We need to make sure we all have transparency. And we agreed that we will have something in the board meeting that shows exactly what the charges are.
Correct.
It's good for all of us to have transparency. And just because a company is good once does not mean they stay good forever. So there's nothing wrong every few years to review these over and over again to make sure we're competitive in the market. And as a finance committee, even when we have other meetings, we all challenge these things just to make sure we get the best value for us, because we're owners also, and for the rest of the owners.
And after you do all,
So we agreed we can put it to bed.
and after you
We're
do,
going to show you something.
after you do all of this, there's always the potential that somebody will make outrageous comments and outrageous threats, but you've done your due diligence.
Yeah, if we can satisfy ourselves as owners and as
Yep.
members of the finance committee, that's the best we can do, guys. And
Yes.
we're doing the due diligence, and you know, and we certainly appreciate the feedback and the input from the owners, and because you point us in directions that maybe we might not think of. So more heads than one is always better. So that's the purpose of these committees. Having said that, we're at the end of time. The other part of the presentation was the PowerPoint presentation I gave at the board meeting. The reason I brought that up is that I did have some discussions with uh, owners after the board meeting, and I explained to them a lot of the things we talked about on this call. And I was going to do a recap of what was presented at the board meeting, because some of those people were either not at the board meeting or came in late and did not see that presentation. But now we're out of time, so we'll leave that as it is. We'll explain the information at the next meeting on the 9th and go from there. And with that, we're pretty much out of time. So I thank you
Can
so
I
much.
just I just want to give you an up to date on the line of credit.
Yep, go ahead.
Morgan Stanley's open to providing us a line of credit, provided that our attorney gives them a letter and an opinion that our condo documents and the state legislation allows a condominium to use reserves as collateral for a line of credit, which in this instance that's what it's going to be. And given that we had a line of credit for 3 years with South Bank, I don't think this should be an issue. But if Scott could follow up with Donna and try to get some sort of opinion that this is not contrary to our condo docs and it's not contrary to state legislation.
So I would want to hold off on involving Donna until we're 100% sure we want to go with the line of credit, because it is
Correct.
a big opinion letter they provide. I've done this at other properties before, and it is standard too for a bank to ask for an opinion letter from the association's attorney. But again, because we're all talking about keeping expenses down,
Yeah.
let's wait till we're 100% sure we want to pull the trigger and then get Donna involved.
Okay.
Eski, did they give you an idea of what the cost would be to get the line of credit? Maybe that's where we start. I mean, if it's too much, then maybe we pass. I mean,
like we did spend close to like 20,000 for that $2 million line of credit. That's going to involve some legals, some recording fees, some stamp fees.
They should be able to give us a good faith estimate on what all the costs are going to be.
Right.
Okay, but the action here, guys, was that Sandra and yourself, Husky, were going to review this offline and come back to the committee with a proposal. So we're still waiting for that proposal.
Right.
Sorry, Mike. It's David again. Just for those of us who didn't hear or didn't listen or just don't like attending meeting or I don't know what. What is the line of credit for?
Well, okay, so here's the thing, guys. This is it's money. It's kind of a flexible loan from a bank, to put it in the simplest terms. And I spoke to one owner after the budget meeting. They said, "Hey, we should use get a line of credit to finance our maintenance fees, to fund our maintenance fees." I said, "No, you don't want to go there. Like,
no.
So there's a lot of people who don't know line of credit. So what it is, what the purpose is. I mean, it's a temporary slush fund, David, just to make sure we have access to funds if there's a hurricane, a tornado, while you wait for the insurance settlements and stuff like that.
It's not replacing, contributions.
It's an emergency line.
It's an emergency fund, right?
Yeah. So we're just getting it in case of an emergency. Gotcha.
Well, we're still questioning whether we need one, so we're at that stage. So we'd like to understand what it's going to cost us to get
Right.
one, to get that quote unquote insurance policy.
Correct.
So
But
again,
for
Sandra
insurance,
Heskey, just please look into this and come back to the committee with your recommendations.
Mike, could you also in the future address as to whether or not I think the insurance company kicked in $50,000 toward the derivative suit and we paid a deductible. Can you also clarify in the future if that 50,000 from the insurance company has been included in these numbers or not?
No, Brooke, they don't cover settlements. They just cover the legal fees. This was a settlement, so that
Okay, well, I've heard it
50,000
two
wasn't
different
covered.
ways, Husky, because I heard that there was that we had a 50, excuse me, it was like 50,000 and some change, and I thought we had to pay a deductible on that, and then the
On the
insurance
legal
company.
fees, not on the settlement. The settlement is all on us.
Okay, so the 56,000 settlement was all us, and then we had the 6,000 approximately deductible. So in total, the derivative out of pocket cost us around 61 grand.
Correct.
Okay.
Okay.
I would offer that document inspection fee processes are cheaper than people filing derivative suits and settlements. But we can differ on that.
Yeah, good point.
Mike, I'm sorry, I just missed on the line of credit, and that's something what we want to have that just to have like a sense of security. What's the purpose?
It's almost like Kathy, it's almost like an insurance policy in case of a disaster
Okay.
or an emergency.
All right.
So
No.
it's not a pressing need. So what we talked about at prior meetings was let's get more information on it and then we'll decide if it's relatively inexpensive, then we'll go for it. If it's something that mounts in terms of cost for the banks, for the lawyers looking at this and what have you, then it's like, well, maybe
All right.
we don't need it.
All right. No, because we just don't want to hear that, we're funding our seers and non-seers with hard cash.
No, exactly. And that's so, I saw an email and somebody called me after the meeting and stuff like that. And they were saying, why don't we use a line of credit to fund our series? And I said, no, we don't want to do that. So,
No, it's because
everybody's
it's
got
a
everybody's got an opinion, but a lot of people, some of them don't know what these things are.
Okay.
Kathy,
Well, no,
I have a real life scenario, like, our non-seers, like in about 6 to 8 months, if this cooling tower project costs us 2 million, we're basically gonna hit almost zero in our non-seers account. But, the months following, we're getting monthly contributions of, $40,000. So that's gonna replenish the non-seers.
yes.
So, theoretically, we could, fund this non-Sears account and pay for the cooling towers while, the contributions are rolling in on a monthly basis over the next year. So that's where it comes in. It just tides our cash flow ups and downs. It doesn't substitute.
Or we delay the projects until we have enough money, especially in the non-Sears, if those projects are discretionary.
Yeah, well, the thing is, though, Katina, unfortunately, when they did the Sears and the non-Sears, okay, like cooling towers, the risers, things like that, they put that not as structural and they put it in the non-Sears. Okay, so
which
is stupid, right? So that being said, those pipes are 50 years old. Okay, they need to get done. So the fact that it's in a non-Sears doesn't mean that it's not something that we're in dire need of getting done. You know what I mean?
The HVAC, Kathy, the HVAC.
Yeah, honey.
The risers are Sears, but not the cooling tower.
Not the correct. Right. I'm sorry. I got the cooling.
Anyway.
Yeah.
Anyway, the idea of a line of credit is not to use it.
Correct.
The idea of a line of credit is
make sure
if you have a catastrophe that we had a big hurricane and the building is in trouble and we use all the money until we get the owners to start putting in, you use a line of credit to get it to a point that it's manageable.
Right.
A line of credit is not to be used for discretionary funds. It's only to be used if it's absolutely necessary.
All right, I'm just making sure that emails that go out, like about how we should be funding, is not getting any traction. That's all I want to know. Okay?
Yeah, usually, this is Barbara again. When I see lines of credit in condominiums, when we're looking at the budgets with our clients, these line of credits are, not necessarily a good sign of the stability of the building. Because
Correct.
we're very fortunate in this building. People don't understand how we are a little bit of an anomaly in the world of budgets with other condominiums. And I see luxury buildings with line of credits. It's because they haven't been taking money from their clients. I see a lot of buildings that are in trouble right now.
Correct.
And so we're not overspending. We're not looking at it like we have a pot of gold either. We're doing, Sandra, thank you very much, Ski again, and Mike. Honestly, the magic you do is, in my mind, I'm very grateful for that. But Kathy, and I, it can be a negative. And when banks look at it, like if someone were to come in and ask for the balance sheet, a bank for someone that wants to get a mortgage, you have that long form questionnaire that you have to fill out. You have to state your lawsuits and you have to state, what you owe. And they can tunk mortgages. And we're just very fortunate right now that we
have a line of credit with a zero balance.
Correct.
Very good money management. So thank you again, you guys, because you're doing a really
I'm
good job.
sorry, you had a question? We got one more quick question.
Yeah, mine is just general for the reserve. Is there a requirement dictated by the state to have a minimum for reserves?
Yes, on the Sears reserves. Yes.
How much is that?
It's based off of the reserve study. So the reserve study tells you how much you have to put in every year.
Depending on the budget.
No, depending on what systems are in the Sears study, what components are in there.
But to Sandra's
what components
point,
are in there and how old or new they are as well. So then the
but
study.
to Sandra's point, with the FOB system, we have 3 years left. So why are we forward funding it? I think that would be discretionary.
We're
not forward funding it.
Point well made, Brooke. I mean, that's something we'll have to look at.
Yep.
First I hear of it, but we'll have to look at that. Listen, I thank you very much for this discussion. And by the way, just for the record, we are having a lot of fun on the Finance Committee. So
We are.
it's good, challenging, and I think at the end of the day, I think it's productive as well. But it's fun. Having said that, the next Finance Committee is on January 1st. So I think Scott will move that. We'll
Good.
move that a few
Yeah,
days.
I think I did the calendar invite for that following Thursday, the 8th.
Okay, excellent. So I still see it on the 1st in mine, but maybe I missed it.
Okay,
So
I can change it.
just double check it.
Yeah.
So it's the 8th. You're looking at the 8 at 3.
Yeah, if it's showing the 1st, I'll change it to the 8th.
Yeah, it's showing the 1st on mine. So
Heskey, Mike, Sandra, Katina, have a good New Year.
All right, bye.
Thank
thank
you.
you.
Thank
Thank
you.
you to all.
Thank you very much,
Thank you.
everybody.
All right,
Bye.
everyone.
All right, goodbye.
Bye. Get out of here.